Imagine getting into retirement and you have millions of dollars in tax-free funds from the compounding that you've actually enjoyed for the past 20, 30, even 40 years. That's exactly what we're going to be talking about today, guys. We're going to be looking at 401ks and really breaking down the difference between the traditional 401k and the Roth option. Now, unfortunately, some of us might not have an option or not have the availability through the employer to do a Roth 401k. But for those of us that do, again, we're going to be breaking down the differences, which of course, the biggest one is when you pay the taxes. So with a traditional 401k, you're actually going to be putting in funds that are pre-tax, meaning that when it comes to your earned income for that set year, the money that you put into that 401k that is pre-taxed money, or the traditional money that is going in there, is going to give you an instant tax benefit that you see it. Now, the big difference, of course, with the Roth is when you put the money into the Roth, you are going to pay taxes on the year that you make those contributions to the 401k, which means the money is already paid, guys. The tax is already paid on that. So when you see the compounding, again, looking 10, 20, 30 years out of the compounding investment of a Roth 401k, you're not going to have to pay taxes on it. So again, looking at the longevity of people investing, does a Roth or a 401k or a traditional 401k really make sense, guys? Let's go ahead and break it down. So what is a Roth 401k? Like I said, the Roth 401k is treated with the after-tax money, the contributions you are taxed on, meaning that you're not going to get the tax benefit now, but you have to think, guys, and you have to remember, when you look at investments, when you look at retirement, it is the long-term play and it is the long-term game that you're looking for when it comes to investing. Now, the main difference, of course, between them is, like we said, when it is taxed. Now, the big thing, of course, is if you're putting money into a traditional 401k, contributions, like I said, are pre-taxed income, meaning you're going to have to pay taxes in the future. Now, the big difference with this, guys, is when you have the compounding, again, looking out 10, 20, 30 years, the compounding effect is game-changing. That is why it is referred to as the eighth wonder of the world, is if you're looking at their compounding interest that you're going to get, then you get into retirement, but now you have to start taking money out of that 401k, and now you start getting taxed on the money that you got and not only put into the 401k, but now you're also getting taxed on the compounding interest and the gains that you have gotten from that 401k, which is the reason, guys, my personal preference, what I do as a certified financial counselor, is a Roth 401k. And again, the reason is when you look at the investment strategy, it is a long-term game. Again, when you're looking, 30 years down the road at the investment that you have in that Roth 401k, if your company does offer it, always go for the Roth option, guys. It is really the short-term sacrifice of a traditional 401k for the long-term gain of a Roth 401k. Now, of course, determining which one is best for you, don't just take my advice for it, guys. Do the research. Starting today, if you're putting money into a traditional versus a Roth, talk to this with your financial advisor or with your tax accountant. See really what the benefit could be if you do put it into a traditional or a Roth. Most of them will go the Roth option. Now, of course, with the traditional, if you're making, let's say, $100,000, just as a nice round number, and you're putting, let's say, 20,000 of that in there, that means you're only paying tax on the 80K that is there. But again, depending on the bracket that you fall into, you're not saving that much money up front for the offhand of what you're going to be gaining by putting money into that Roth 401k. Now, of course, this makes a big difference on how much you invest depending on the wage, because again, if you're putting in 2%, if you're putting in 4%, it's not going to have as much of an effect. But if you're an individual like myself that is getting ready for retirement and putting in 15+% every single year, guys, this is where the Roth is going to make leaps and bounds, where if you're putting a ton of money into a Roth 401k, then you compound the growth factor. Let's say it's growing 8 to 10%. When you get to retirement, not only do you not have to take the money out, but you're not going to be taxed on the money that you're taking out. Now, one thing to remember, guys, it is not all just about the taxes, where a lot of people really go in there and think about. Because when you look at the 401k contributions, you are capped at a certain dollar amount, but you can also do Roth IRAs. You can do HSAs. There's a lot of other tax vehicles to kind of coincide or to go hand in hand. So again, if I'm putting money into my Roth 401k and then I'm putting money into my HSA, the chances are some of those are going to kind of offset each other, especially with the triple tax advantage that we're seeing within that HSA. Now, one thing to remember, guys, is when it comes to IRAs do have income limits where your 401ks do not. That is, again, a big change. And then, of course, the 401ks have higher contribution limits as well, where Roth IRAs in general have a much lower and a lower amount that you can actually put into those investment vehicles. Now, accessing your money, 401k doesn't have the flexibility of like a Roth IRA or something of that. You can't remove the contributions at any time. However, when you hit that 59 and a half, the penalty is gone. And now you can go, as long as you've held that account for 5 years, again, with the IRA, you can take the money out. Now, in addition, guys, similar to the 401k and similar to the IRAs, they do have catch-up contributions that we've actually seen. Now, required minimum distributions during retirement start at age 72, but money in a Roth 401k can be moved into a Roth IRA. That is right, guys. A Roth 401k can move into a Roth IRA, which means you do not have to take the distributions. You can pass the money on to your heirs. And again, it is really tax-free money. So overall, guys, definitely want to put money into, and I really consider putting money into that Roth 401k or a Roth IRA, again, depending what your investment vehicle is, because of the tax advantage. Again, it's not going to be as much of a tax advantage if you really break it down mathematically to how much income you're putting in there, to how much you could actually be earning in comparison to how much tax savings in 1 year compared to the growth factor that you can really look out, again, 10, 20, 30 years. Makes a big difference when you're breaking this down, guys. Now, like I had said before, talk to your tax advisor, see what the best option is for you. And again, we kind of went back and forth in this with my wife and I, and with our tax advisor, with our financial advisor. What really made more sense? Was it lowering your AGI, your adjusted gross income? Was it actually getting the tax benefit today to sacrifice and really forfeit the long-term growth of a Roth 401k? In my opinion, guys, again, we landed on the Roth 401ks for the simple fact that we don't plan on using all of the money that we're saving in this retirement. This is going to be money. Essentially, there's going to be a time that it is going to go to our heirs, that it is going to be going to our children. And if the money is there, again, I don't want to have to pay taxes on it. And I don't want to worry about that expense when we do get into retirement. Now, even with that being said, chances are we'll be making less money during retirement. But again, we don't know what the growth factor is going to be. And looking to retire, looking to actually access this funds, probably around 65. You figure even in my situation, I have 21 years of growth. That is right, guys. 21 years of growth in a Roth 401k is going to be a game-changing difference versus putting that all into a traditional, then hitting retirement, then getting taxed on the amount that we have to pull out, or if we do have to pull out anything out of that traditional. That is the reason, guys. Number one, I would absolutely go with the Roth. And the reason being, number two, the tax advantage that you do see. So again, guys, that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.